collecting later in life, collecting less, or having more in taxes.
Interesting. If you broke it down in terms of investing, common mistake people make when they're trying to dabble in the stock market, do you say that it's probably better to be in mutual funds, or in some cases picking some individual stocks is okay?
I'm an advocate of mutual funds just because of the diversification. There are funds out there, with one fund you would have 500 companies inside there. And if you have 5, 10 different mutual funds, you literally could have thousands of different avenues of your money. And so it's important for us to know that, one, if you're investing in mutual funds, you take some of the emotion out of buying and selling. Most people know that you want to buy low and sell high. But most individuals, when they have the responsibility of buying and selling themselves, they do the exact opposite. They buy high and they sell low because of emotions.
Right.
So mutual funds take out some of that emotion. And you can manage mutual funds just like you can manage individual stocks or any other portfolio. But we're advocates of mutual funds primarily.
Okay, now with what's happened to real estate, a lot of people would say, well, you know, that was a complete meltdown. But in your portfolio, real estate should be part of it, and your house is that, right?
Without a doubt.
That's
Absolutely.
a big chunk.
It is a big chunk.
Do you look at your house as an investment, or simply really, in the final analysis, a place to live?
It should be a place to live. Many people looked at it as an investment the last 10 years. And I don't want my clients, when they retire, to have to sell their house and take that equity and live off of it. So,
or a reverse mortgage.
Or a reverse mortgage. So the house is a part of your net worth and is in your balance sheet, but we don't want to look at it as an asset that we're going to be taking money from in retirement. So we want someone to buy a house for it to be their sanctuary, not an investment. And I think that that is a paradigm shift that people are experiencing right now.
Do you believe that people should be trying to pay their house off?
I'm anti-debt. So I absolutely believe that first you need to pay off that credit card debt, and ideally, in the perfect scenario, we'd like to have that house paid off before you retire.
Why is that a benefit? Because isn't there a tax implication to not paying it off?
There is. You are able to itemize and write off the interest off of your 1040, but you also have a standard deduction. And so if you get to the point where you're paying down your mortgage and your interest is less than your standard deduction, you're going to choose the standard deduction option over itemizing. At that point, there is no longer an advantage for you to have a mortgage, and your primary focus should be pay it off.
All right. Well, we're going to be back, and let me hold it up again. This is Jacob Gold's new offering. It is called Financial Intelligence. Getting back to basics after an economic meltdown. We can all agree that that's exactly what we've been through this year, and a lot of you are feeling it. He's going to give you a little bit of a roadmap on what you should be doing to secure your future when we come back on Newsmaker.